Hello, money majors. Feeling a bit lost in the maze of investment options and jargon? Worry not. We're setting out on a mission to demystify the investment landscape, breaking down top investment platforms that are beginner-friendly. We'll guide you through the key features to look out for, from user-friendly interfaces to educational resources. Whether you've got a few dollars to spare or a larger sum to invest, today we're helping you understand where and how to begin to grow your wealth. Before diving into specific platforms, let's examine what you should look for in a beginner-friendly investment platform. First and foremost, the interface should be user-friendly. You don't want to spend hours figuring out how to navigate the platform or make transactions. It should be intuitive and easy to use. Secondly, consider platforms that offer educational resources. These can range from tutorials and articles to webinars and even interactive tools. These resources can help you understand investing basics and, as you grow more confident, delve into more advanced topics. Thirdly, be wary of fees. They may seem insignificant at first, but over time, they can chip away at your investment returns. Look for platforms with low transaction fees, no account minimums, and no annual fees. Fourthly, a variety of investment options is a good sign. A platform that offers everything from stocks and bonds to ETFs and mutual funds gives you the opportunity to diversify your portfolio. And as they say, don't put all your eggs in one basket. Last but not least, robust customer support is a must. Investing can be complex, and you want to know there's someone you can turn to when you need help. This can be in the form of live chat, email support, or even a hotline. Remember, having reliable customer support is essential, especially for those who are new to investing. First up, let's talk about Robo Advisors. These are digital platforms that provide automated, algorithm-driven financial planning services with minimal human supervision. They're like your personal investment assistants, working tirelessly around the clock. Two examples of such platforms are Betterment and Wealthfront. They use your financial goals and risk tolerance to shape an investment strategy that's tailored just for you. It's like having a personal finance manager, but without the hefty fees. Robo-advisors are known for their cost-effectiveness. They typically charge lower fees than traditional human advisors, which leaves more of your hard-earned money to grow through investments. And the best part, they automate most of the process. This means you don't need to spend hours every day monitoring the stock market or adjusting your portfolio. So, if you're someone who prefers a hands-off approach to investing, or perhaps you're just starting out and could use some guidance, Robo-advisors can be a great choice. Robo-advisors can be a great choice if you prefer a hands-off investment approach. Next, we have online brokerages and investment apps. These platforms have revolutionized the investment landscape, making it more accessible to the everyday individual. Let's start with online brokerages. Think of platforms like eTrade or TD Ameritrade. These are digital storefronts where you can buy and sell investments, from individual stocks and bonds to ETFs and mutual funds. What sets these platforms apart is their commitment to education. They often have a wealth of resources available to help you understand the investing world. This can include articles on investment fundamentals, tutorials on how to use their platform, and even webinars where you can learn from industry professionals. This commitment to education can be a valuable asset for beginners, helping to demystify the investment process and empower you to make informed decisions. Then we have investment apps like Robinhood or Acorns. These platforms have taken the convenience of online brokerages a step further by packaging everything into an easy-to-use app. The beauty of these apps lies in their simplicity. They have user-friendly interfaces that make navigating the investment landscape a breeze. But don't let their simplicity fool you. These apps are powerful tools that can help you grow your wealth. A unique feature of many investment apps is the ability to start investing with a small amount of money. Some even offer fractional shares, allowing you to buy a portion of a stock rather than the full share. This can make investing more accessible, especially for those starting with a smaller budget. So, whether you prefer the comprehensive resources of an online brokerage or the simplicity and convenience of an investment app, there's a platform out there to suit your needs. Remember, the best platform for you is the one that aligns with your investment goals, your level of knowledge, and your comfort with technology. So, take some time to explore your options and find the platform that best fits your needs. Whether you prefer a more traditional brokerage or a sleek investment app, there's a platform out there to suit your needs. Last but not least, let's talk about traditional brokers and index funds. You may have heard of firms like Fidelity or Charles Schwab. These are traditional brokers and they've been in the game for quite a while. They've seen market trends come and go and have adapted to the digital age while retaining their core services. Their strength lies in a mix of robust tools and personal advice. This combination can be beneficial for beginners who want a comprehensive platform. You get the best of both worlds, the convenience of online tools and the comfort of human advice. Now let's switch gears and talk about index funds and ETF providers. A giant in this field is Vanguard, well known for its low-cost index funds and ETFs. If you're a bit risk-averse or looking for a set-it-and-forget-it type of investment, Vanguard might be your match. Investing in these funds means you're spreading your money across a wide range of assets, effectively reducing the risk associated with putting all your eggs in one basket. It's a passive investment strategy, but don't mistake passive for ineffective. Over time, these funds can yield significant returns, sometimes outperforming actively managed funds. These platforms offer a range of options, from personal advice to low-risk, diversified portfolios. Choosing between them depends on your personal preferences, investment goals, and risk tolerance. Remember, investing is not a one-size-fits-all journey. Your investment experience should align with your financial goals, risk tolerance, and time commitment. Understand that with investments, risk is always a part of the equation. It's possible to gain, but also to lose. Therefore, always do your due diligence. If you're unsure, don't hesitate to consult with a financial advisor. Don't forget to subscribe for more informative videos like this one. Thanks for watching and happy investing.